Hi, I'm Kep Kepner, CPA here in Dallas. We're going to talk a little bit about tax strategies at year end. The reality is that there are many tax strategies that you can use to decide when you're going to pay your tax. In almost every tax strategy case there is, the reality is you're going to pay tax sometime. Hopefully you pay it at a lower rate, and hopefully you pay it further in the future, because that gives you, the business owner, the chance to use your money for what you want to use it for. So one of the things that Congress does, Congress has a tax act that they pass at the end of the year that includes all kinds of tax goodies, and they keep us in doubt until the year end about the size of these goodies. Well, we expect that one of the things that's going to be there is the ability to write off 50% of any new asset purchase in the year of purchase. The remainder, the rest of that purchase, would be written off using regular depreciation. We also expect that the favored 179 write-off will be available. Well, that's the term people use for a section of the tax code that lets you write off business equipment 100% in the year of purchase. Now, that's an interesting thing because the amount you've been able to write off has varied from $10,000 to $500,000 off and on over the last 10 or 15 years. So why would Congress give that kind of option? Well, they give that write-off to people to encourage them to invest in equipment that's going to hopefully grow their business and trickle down with salaries and profits to the owners and employees, so that they're going to have much more economic benefit for the country as a whole. So right now that limit is $25,000. I personally think it's going to go up in this year to, I'm not sure the amount, we'll have to see. But also what happens is once you buy too much of that kind of asset, the IRS says, well, you're not a small business anymore, so we're going to cut you off. So right now you can buy $25,000 worth of assets, write it off in the current year. But if you buy $200,000, at that point you have to start depreciating that $25,000 not in 1 year but over the life of that kind of asset. So if you buy $201,000, then you only have $24,000 of 179 write-off. If you buy $202,000 of assets, you only have $23,000 that you can write off. So look for this. It may not be apparent until the last part of the year. So how do you as a business owner make a decision? Well, the way you make a decision is you buy assets only if they're going to help you grow the profitability of your business. You don't go out and buy that big SUV, which incidentally also get this favored tax treatment. Why would you go out and buy a 6,000 pound, $55,000 Escalade when really that's not what you need? You're just doing it because you want to. And so you get to write off a big part of it in this year. Well, that's wonderful until you try to sell it. Then you have a low basis and you have a big profit that you got to pay tax on. And Uncle Sam's going to recover all of that tax savings that you had. So as a business owner, only buy the things that you need to create profits for your business. And if you get a tax break, that's great. Use it. But don't buy something just for the tax break, something that you're not going to use to increase the profits of your business. If you need help analyzing this fact or any other tax aspect of your life, give us a call. Thanks.